So we have a few interesting factors taking hold in this market right now, and it's all to do with the larger time frames. I want to highlight this to you just to kind of get a bit of a perspective change. It's really useful at times like this because a lot of people are not doing this. Most people aren't. They just aren't bothering to, or they don't know that they should, and that causes problems. That means that people aren't able to kind of maintain a healthy perspective of every kind of facet, everything that's going on in the market. And you don't need to keep account of everything, but you do, it's a good idea to consider what the other side is thinking. And one of the things that we've started to see here on this chart is actually just the trend starting to slow down, right? Like if you take a look at how long it took Bitcoin to, on this occasion, drop down by $4,000, it took Bitcoin 6 days. But if we look at the 6 days that followed, Bitcoin actually in that time managed to get up by 6%. And, since then, we just haven't really set a low. It's been how long since we set this low? It's been 15 days, right? So, just over 2 weeks, we still haven't set a low, whereas previously 6 days and we're dropping down by $4,000. And, so what we're seeing quite clearly is just that this sell-off has slowed down. We are looking at a slower sell-off right now, and what I wanted to show you in particular is this weekly candle. Now this is, we're coming up to some really important price action here, because if you look at the date, it's already, the end of May, basically. It's the 27th of May at the time you're recording this. It's going to be the 28th for most of you in the rest of the world. And that means, we're at the end of the month. We've just closed off another week. And, what I'm seeing here, ladies and gents, is quite clearly a sell-off that started up here in the $31,000 range with a big sell-off. All right, and then the subsequent sell-off candles that we had after that were also quite large. But since then, right, the previous candle and the one we're in right now, these are candles of indecision, right? If we're getting candles where the market isn't really trending by much, we're testing the lows and then we're testing the highs and we're just kind of ending up in the middle. And if that's happening again for a second week in a row, these are actually really big warning signs. Just tapped the button wrong. These are actually really big warning signs that we're potentially looking at the market getting ready to reverse, or at least, and this is what's important, at least that the current trend could be losing some steam, right? And how do we know the current trend could be losing some steam? Again, it's just looking at the weekly candles. We have some beautiful examples of it happening over here as well. See, we've got this really nice series of bullish candles right here in the market. And then as soon as we start producing these candles, right, these doji candles that represent indecision, where we're testing the highs, we're testing the lows, we're closing in the middle, and we're doing that again and then again. These are really strong indications that actually the market is ready to top. Okay, and we did actually get the breakout on this occasion, so it didn't quite work out exactly the same way that I'm saying, but that doesn't make me any less sure about what I'm telling you guys, because it still did mark the end of the move. The price did rally up, don't get me wrong. It went up by another $2,000, but that was only 7%. And since then, we've dropped down by a fairly substantial amount from our high to our low, right? I mean, if we measure it from high to low, we're down by 17%. I mean, technical definitions for a bear market, depending on where you go, are a 20% drop, right? And we're just kind of, we're basically on the edge of that right now. So these doji candles mark the reversal for the upside. They mark the reversal for the downside down here, right? Take a look at this. We've got, again, another candle of indecision here, followed by another candle of indecision. Again, we're testing the lows, we're testing the highs, we're ending up more or less in the middle. This is a strong sign of indecision, and this is what ends trends. Okay, we saw something similar right here. We tested the high massively, we tested the low a little bit, we kind of ended up not quite in the middle, but we didn't close the candle in any crazy place here, right? These are the kind of things that we do when the market is about to reverse. And what I've noticed here is that we've done the same thing now. Now, we do have another day, and this is really important, right? I mean, it's Saturday right now. We've got Sunday, all of Sunday to play out until this weekly candle actually closes. And yeah, anything could happen on this day. But, with traditional finance closed, right? S&P 500, the dollar, gold, and so on, when the big money that actually kind of has a big influence on these markets just isn't moving around anymore, or if it isn't moving around with as much velocity, well, generally that means Bitcoin just kind of sleeps a little bit, you know, on the weekend. It doesn't really do anything. It's just asleep. It's just resting. It's just getting ready for the next week ahead. And so, you know, for me, for what I'm seeing here, I don't think the weekly the weekly candle is going to change. You know, I don't think that we are looking at something like that. And in fact, you know, the more I look at this chart and the fact that we haven't actually gotten the rejection yet, the more something like this is becoming compelling to me. This is actually something that I covered with you on the YouTube channel previously. So if you are subscribed, you're going to know all about that. You can obviously do that by hitting up the button down here. But when you are down here, definitely do make sure you check out the exchanges I've linked down below. These are the exchanges that I'm trading on, especially the top ones right here. BingX, linked right at the top, will allow you to trade these markets without KYC. That means no picture of yourself and no picture of your ID, which is great for those of you that are a little bit more privacy minded. But way better than that, way more interesting than that, is the ability to trade Tesla, Apple, Amazon, Google. You've got Forex, you've got indices, the S&P 500, Brazil 60, my bad, gold, oil, all without KYC, all with a Bitcoin deposit, which is extremely cool. You just don't have that level of flexibility anywhere else right now, which is very, very interesting to see. Bybit also giving you up to $30,000 in trading bonuses. That is free money that they deposit into your account, which you can trade with. Any profits that you generate are yours to keep, so that is well worth checking out. They're both linked right at the top of the description if you are interested in trading on these markets. They're the same exchanges that I've been using. But what it does do right here in this market, as I was saying earlier, is it starts to convince me a little bit more about patterns like this, because these are generally going to be inherently quite bullish patterns, and Bitcoin is just kind of leaning down with this right now. Now, I'm not convinced by this, and I still think that, you know, like, what I'm discussing to you is a little bit more like abstract, right? Like, we're talking about a weekly candle potentially leading into reversal. These things don't mean that we can't come down for one more liquidity grab, and that's really important. The setup on this chart is still pointing to a $25,000 Bitcoin for a lot of reasons, to be honest with you guys. You know, one of the big ones that I did want to show you is actually on this chart right here, where if we actually kind of pay attention to what this is pointing to right now, we've got this same kind of falling wedge pattern here, which is incredibly bullish. But you know, look at where we got the bounce from. We got our bounce exactly off the 0.33 level. This is a really big deal. The 0.33 level sits at 25.9, and we bottomed out at like 25.8, right? So basically, like within $50, $100 of this fib level is where the price actually bottomed out. And that tells me that we are respecting the fib levels really well on this chart. And we already know that because the 618 level lines up with what is, in my opinion, the most important level on the chart. It lines up right here. So if the 618 level is important, it has to mean that the 382 level is important as well, at least in my experience. And the reason for that is quite straightforward. It is simply because the 618 level and the 382 level are mirrors of each other, right? So if we actually take a look at this, you'll see that our you can't really make it out now. If I just move the fib a little bit, like you'll see this right here. They're at the same levels from low to high. They're at the same levels, but our 382 level and our 618 levels, they mirror each other. Okay, so they're really important. And if the 618 level is showing such a significant price area and the 382 level lines up extremely conveniently with 25k, it really means that we are still pointing in that direction, or at least that the market is giving us that really obvious support grab. That doesn't mean it's actually going to happen, but it is something that's worth keeping in mind. You know, I mean, falling to the 0.33 level and then starting a bull rally is definitely possible. I'm sure it's happened before quite a few times, but you know, generally it is going to be that main support area that you want to see the price come down to. You know, and that is something that I'm keeping in mind, right? Like, even though we've got this falling wedge right here, all it would take is, you know, we just kind of slowly trend up here and get rejected one more time, and then, you know, something like that, certainly possible. I'm not saying that it's likely or anything like that, you know, but certainly possible. And this is the thing that's important, right? It's just important to be able to have these kind of discussions at times like this when, you know, to be honest, people are just not really thinking right now. I mean, we've almost been range bound for a while, so everyone's just kind of losing focus of the market, but things are changing and moving around. You know, if we refresh the 4Flies dashboard here, we are working with a better long and short ratio today. We've got 1.6 long positions on retail Binance traders now for every short, right? Which is significantly less than what we were seeing just a few days ago, and no surprise whatsoever, that is happening after we've seen another leg down. Now, granted, we have recovered back up, and since then, you know, the market's just been kind of hovering around, waiting for a decision to be made, basically. But bottom line, what's very clear is that when the market does move down lower, we are flushing out some of that leverage. Okay, and if that's the direction that we need to keep on going in order to move up, well, we still have all those resistance levels looming over Bitcoin's head right now. It certainly looks like in the short term that Bitcoin does want to break out. You can see that it's kind of forming a bull flag right now, and it's already done this, right? We moved up, traded sideways for a good number of hours on the 4-hour time frame here, so this was like a day. Moved up again sideways for like a day, right? So if we're going to kind of print the same thing again, then that will put us probably around the 27.2 area or whatever. We know that 27.4 is the next kind of really important area on the chart, and that's what I want to dive into a little bit deeper right now with you guys on this video, because this is really, really important. The fact that we found so many rejections here recently does make the 27.4 area quite important on this chart, in my opinion, and that's going to be the next kind of significant resistance level that I'm seeing on this chart, kind of after the current level that we're trading at right now. So if we are able to get that big kind of blast up there, that would be where I'd be kind of expecting a bit of resistance moving forward, and then from there, maybe another pump higher. For me, that key level that needs to be broken for this market to potentially find itself in a good place is going to be right up here at 28.6, and this is a long way, right? I mean, there's a lot of resistance for Bitcoin, kind of around here, and then in this big gap here, right? And we already know that this is something we've been talking about a lot on this YouTube channel. If I just kind of show you where some of my key indicators have been, the VPVR, I mean, I'm sorry, the Ichimoku cloud is rejecting us right now, actually, to be honest, and it's continuing to have resistance throughout this whole range. If we look at the VPVR, where are we getting the big spikes? We've got a huge spike right here where we are. We've got another huge spike right at this green box that I drew for you guys, and another huge spike before we get up to this yellow line. So, with the VPVR, we've got a lot of resistance, and all the VPVR does is it just helps us visualize where people are trading Bitcoin, right? So if there's any particular price ranges where a lot of people are trading Bitcoin, it's going to show a big spike on the VPVR, and that's usually where reversals happen, right? We usually reverse our price at key levels where people who have been trading the market have seen reversals happen, where people have seen consolidation happen. That's when people are just psychologically more willing to get in or get out of a position. Okay, and that's exactly what happened down here when Bitcoin bottomed out over here at $20,000. That it was actually 19.6, 19.7. When Bitcoin bottomed over there, that was the situation where we fell back into a consolidation zone, we fell back into a reversal zone, and that's why the smart traders, would have taken their long positions here, and the absolute, headless traders that just cannot operate at any frequency beyond a chicken that's panicking, thought that the market was going to crash and die from here, and they had to make that very clear to me in the YouTube comments. But we know the deal. Four Flies always gets the last laugh. The catch is that I get my last laugh when it's been a long time. I do have to wait for it, but it does come eventually. And yeah, I know I was not showing you the chart that whole time, but that's okay. I was just talking about this drop down at 20K. I only make that mistake on live streams, actually, but here we are. I've made that mistake right here as well on video. But this is the thing is like if we are able to get above here, I am seeing that quick snap up to 27.4 probably being possible. Just given that we've been finding resistance here, I don't think that anything else in this range will be problematic, but this will be the next area to break. And so really for me, the picture that this is painting is that just no matter what we do, we have more problems looming ahead until we get above 28.6, as I've drawn right here with this line. So for me, that's going to be the key level that I'm watching in this market. I'm going to continue to see how traditional finance behaves as well, but this is definitely, like the dollar, for example, definitely has more space to keep rising up just from what I'm seeing right here, which is a little bit surprising because the S&P 500 has now recovered back up, and it's actually just kind of back tested old resistances, new support, and now we're, probably going to be targeting these highs, right? So, we are seeing a divergence here where, people are, at the same time that people are buying the S&P 500, they're also more interested in the dollar, which is just, quite unusual. Generally, it's exactly the opposite, right? People want to move their dollars away into investments if the dollar is getting weaker, but right now, That's just not what people are thinking right now, and that's where money is going. So you know, this is going to be something important to see. The really good news that I have for you guys is that you never move up in a straight line, right? And that applies to Bitcoin and the dollar just as much. It's equal, right? So you know, I do have to expect that, you know, as we are going to be approaching these kind of resistance levels like this red line or this green box up here, that problems will kind of start to enter for the dollar, potentially resulting in at least a temporary setback before continuing, or something much more substantial. I'm not sure which of the two it will be. Obviously, I am leaning to something more bearish for sure, you know, but no matter what happens, what's really nice to know, what's really reassuring for us, is that if you've only been pushing the green button for a long time, you probably have to start pushing the red button. And the good news for Bitcoin is we've been pushing the red button for quite some time here. You know, we're not pushing the red button as much as we used to, and I've shown you why with the weekly time frame. It's just very clear that this bearish trend has lost momentum. I don't know if you can argue this reasonably, to be honest, because I mean, look at it. It's just, these are classic reversal candles, and they're happening as we're just only clinging onto an area of support. You know, is this just going to be one of Bitcoin's classic deviations that it performs all the time? Well, I'm not, you know, I'm not prepared to make a conclusion on that for sure, but I'm certainly leaning, you know, well, I'm not even leaning in the bullish direction, but I'm certainly open to this, you know, like I'm not going to just ignore things that are actually really important. You know, like seeing these kind of reversal signs on larger time frames, because we know that on larger time frames we're still bullish. We haven't actually done anything to invalidate the bullish trend that we're in. We're still setting higher lows, we're still setting higher highs, we're still maintaining a healthy trend with good corrections. We're just not doing anything bad. And that's what I was saying when the dump started too. You know, I've been sitting in my long position for an incredibly long period of time now. You guys have seen this position evolve from the very beginning to over $200,000 in profit, and now obviously I'm not in as much profit because the price has dropped. You know, but the whole time I've been saying to you guys that, you know, I mean, a big rally like this, it needs to correct somehow. You know, and that's what we're seeing right now. And I think that a lot of people are going to be getting shaken out of this kind of thing, which is exactly how it always happens. People just get shaken out of ranges like this. But if you are able to hold on, you know, the thing that I'm keeping in mind, at least for myself with my investments and my financial decisions, is that this market is still in the same bullish trend that it was in when we were over here, or when we were over here, or when we were up here. You know, we're still in the same bullish trend. We're still setting the same higher lows and the same higher highs, and it looks to me like, you know, things could be dissipating a little bit. So again, I want to be super clear. Does this mean that we can't get a drop down to 25? Absolutely not. No, we could still get a drop to 25, and this would still be an indication that momentum is being lost, because that's what happened previously. It's actually quite normal that, you know, we start showing signs of a reversal, we have one more push. This is where a lot of people get screwed, and then the market goes in the direction that it was supposed to go in. It's exactly what happened right here only a few weeks ago, and so I don't think it's far-fetched to say that it might be happening to us right now. It happens at many reversal points. We were forming them all over this range, actually. Just all of these candles, basically, when the market isn't really moving, and especially when we're testing the upside and the downside massively, like, you know, this wick here and this wick here, you know, when we're going everywhere and then still closing in the middle, these are signs that, like, the bulls tried, they failed. The bears tried, they failed. We are at an indecision point, right? Previously, and this is what's really important, this is how you really understand the mechanics of the market, there was no room for disagreement. The market was going up, and everybody was like, if you weren't on the train, then tough shit, you were missing out. But this is just how it was. We were just rallying up, right? There wasn't much room for interpretation. That's where you can see, actually, yeah, the trend is super strong. Very obvious. I'm not telling you anything you didn't already know. But these candles, they really clearly represent that the market just doesn't have that much strength, right? We just don't have the same strength that we had on this candle up here anymore. And that can be an indication that, yeah, maybe we got one more push here, but it should be wrapping up relatively soon, or it could. You know, that's kind of what happened in the past. And so that's a similar situation that I think Bitcoin's in right now. It's actually making me a little bit less bearish in terms of the lows, because one of the things I've been consistently saying to you guys is that support is at 25, but it actually kind of stretches all the way down to 21.5, right? Like, because there's a lot more support for Bitcoin all the way down to 21.5. And I want to be super clear. I still believe that. I still agree with what I said in the past in that sense, but I don't know if Bitcoin can actually take itself down that low anymore. You know, like, this correction has been really long and drawn out, and there comes a point where you just kind of have to continue the trend again, right? And I think that's going to depend a lot on traditional finance and stuff like that, which we're not at a resolution for yet. So it might take some more time, and in that time things could for sure get bad, and that is the risk that Bitcoin is facing right now. But if these things do kind of, you know, start to get a little bit better, you know, and especially considering the dollar's gone up by so much that now it has so much room for it to drop as well, you know, for me, just kind of falling down to the low 20s is getting a little bit harder for me to imagine. You know, and there is some other analysis, like with the 2-month Heikin-Ashi candle, there's like 23.3 is a key level as well. Those of you that are interested in that kind of analysis, you can check it out, but I'm not going to share it with you on this video because, to be honest, I just don't want to talk about it. It's not the kind of analysis that I like, but I think a lot of you guys might find it interesting if you do look at Heikin-Ashi candle, so you can definitely check that out. You know, so there is a lot going on with these price levels, and we don't want to be losing important ones because it's going to start to really shift the trend and make it look like we're back in a bearish trend. You know, but bottom line, at the same time, I mean, something that we have seen Bitcoin do so many times in its past is fall down to 618 retracements. This is something that is very typical of Bitcoin, you know, within bull markets, and I've shown you many examples of that in the past. You know, back in 2017, if you just look at bullish rallies and draw a fib from the bottom to the top, you're going to find a lot of the time that the price fell down to the 618 level. So, you know, despite everything I've just said, this is still an incredibly strong area of support, and that's the reality for Bitcoin. This is the reality I've been telling you guys about for an incredibly long period of time, you know, which is that we've just done something really impressive here. So, you know, we can pull back all the way down to 21.5, and as far as I'm concerned, you know, we're still bullish. I mean, you know, the fact is, and this is a fact, we would still, if we bottomed out over here, right, if we did something like this and then moved up, we would still be setting a lower high. I'm sorry, a higher low, right? We would still be confirming the classic, most basic requirement of an uptrend, which is setting higher lows and higher highs. So, you know, nothing would really change from that perspective either. Again, this is where people really get swept away. Is like when, you know, when you see the price dropping down to 22, 21.5, 23, 24, and you start shitting yourself, and, you know, long and short ratio is flipping, and now it's heavily short, and, you know, fear and greed index is dropping and so on, and you start to really panic. This is where people forget that actually the most important support level is still really far away. It doesn't mean we need to fall down there. A lot of the times we don't need to, and we can still rally up. But sometimes we need the deep corrections, and especially if we're going to form really big rallies to the upside, then we can't really even avoid them, to be honest, right? Like if we're gonna have a big explosive rally up, I don't know of any time that we've done that without first crashing down really hard. You know, I want to remind you guys about what happened in March of 2020. This huge crash here that seemingly came out of nowhere was exactly what preceded the move up to the $60,000 range. This is always how it goes, right? This kind of extreme price action always has a whiplash effect where it just kind of like it just rubber bands and just goes right back to the other side, you know, purely because the price action is too extreme. And you know, I have to think that we're going to see one of those, you know, kind of supply demand, you know, balances start to shift again if we start dropping down towards areas like 25k, because I do think there's going to be a lot of money sidelined ready to get into the market at that stage as well. So that's what I'm seeing there. You know, it's a complicated picture, guys. You know, short term we still have most of our signs from what I can see pointing to the downside, but longer term, and longer term is really important as we are approaching critical support areas, we are starting to see signs that this momentum might be dissipating a little bit. You know, and that's important as well, because if bearish momentum goes away and if we're already in an uptrend, then we might just happen to resume that uptrend. That might result in some really exciting price action, and it pays to be prepared for that stuff. That's why I've been highlighting to you guys the exchanges that I'm using with the links down here and the cool bonuses available to you guys as well. Over $5,000 on BingX. This is the same exchange that I mentioned earlier with access to, you know, gold, oil, Apple, Tesla, all on leverage, by the way, all without KYC, without a picture of yourself, without a picture of your ID. Very privacy minded. Prime XBT is the same, by the way, and they're going to give you up to $7,000 in bonuses, so that is very cool. Well worth checking out. This is just whatever you deposit, 7% comes back when you use my promo code on my link. 7% comes back as a bonus up to 7k. So that is just free money that you can trade with. You can do anything you like with. Very, very cool indeed. And then the deals with Bybit are also very cool. I mean, you know, depending on how much you deposit and depending on how much you trade with, you're going to get free money in your account up to 30k that you can redeploy into the market. And again, any profits are yours to withdraw. So there's a lot of very cool offers available to you guys. VIP also right here if you do want to get inside and learn how I trade, if you want to watch how I'm trading in real time, and so on and so forth. If you want phone calls with me, you get that as a yearly member in VIP. It is well worth checking out if you're looking to take your trading to the next level, especially in this market condition, these kind of market conditions that we have right now. This is where, like, you know, you want to be prepared right before the storm actually happens, so that when it comes, you know what to do, right? What you don't want to do is when the storm comes and you're ready to take, you know, and the trading opportunities are here and there's like something every day. At that time, you don't want to be stuck learning. You don't want to be stuck dealing with bullshit lessons that you should have learned 6 months ago, right? You want to have the learning process finished by the time the volatility is in, and to be honest, you've already missed so much of it, you know, and I've definitely been taking advantage of it, and I'm going to continue to do so in these markets. So if you do want to see how I'm going to be doing that, if you want to get access to everything else, because there's a lot more that I haven't mentioned, you can follow these steps on screen right here. It puts you in a direct chat with me, and other than that, check out the bonuses if you are interested. But with that, I really hope you have enjoyed this one. You know exactly what to do. Hit up the likes, subscribe, tick the bell, to all the good stuff, and I'll see you all in the next one. Cheers.